Welcome back to Teshkid FX for another quant price prediction update, and in this video I'll be giving you the short-term and the long-term scenarios that I'm expecting to play out. And before I kickstart the video, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to kickstart the video here on the 4-hour chart by first giving you a brief of what has been happening here on the quant chart, where you can see that after making it to an all-time high, we started the bear market, where we have been seeing lower prices in this ABC corrective structure, which has now taken us back to around the $40.1 mark. And having done so, I believe we saw the bear market low at around the $40.1 mark. Then we started this very nice bounce to the upside, obeying the Elliot structures, where you can see I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completing the formation of that higher Elliot wave count 1 to the upside. And that is so because the first wave to the upside is an impulsive wave, and we also expect to see fractal waves in formation within that wave 1 to the upside. And whatever we expected next after seeing the formation of a higher Elliot wave count 1 is the formation of a higher Elliot wave count 2, which is a corrective wave. And because of its corrective nature, we also expect to see an ABC corrective structure in the formation of that higher Elliot wave count 2. And once we see the low for this higher Elliot wave count 2, then we can expect an impulsive movement to the upside in the formation of a higher Elliot wave count 3. And that is what I'm expecting on the long-term scenarios here on the quant chart. And first, sketching out a minimum target area to the lower side in the formation of this higher Elliot wave count 2, using the Fibonacci's, connecting them from the high, that is from the low of the first wave to the high of that first wave. That gives me a minimum retracement area to the lower side in the formation of a second wave between the fib level 0.5 and the fib level 0.618, which is a target area that we have fully maximized. And that target area lies between the $134.5 mark and the $112.3 mark. And even though we have fully maximized that target area, there's still room for us to continue pushing a little bit lower, because you can see we have lost the fib level 0.618, and because of that I have to extend my target area back to the fib level 0.78, which perfectly lies at around the $80.6 mark. And removing the Fibonacci's to give you the short-term scenarios that I'm expecting to play out, I believe we're in the formation of these wave C to the lower side, in the formation of this higher Elliot wave count 2, and now wave C to the lower side is an impulsive wave, and because of its impulsive nature, we also expect to see a 5-wave structure in formation within that wave C to the lower side. And we can have that 5-wave structure right here, having these as the wave A to the lower side. Then we saw that wave 2. Then we continued pushing even low in the formation of a wave 3, then a wave 4 making its peak at around the $134.4 mark. And I'm expecting one more leg down in the formation of this wave 5, which should fully maximize the formation of this wave C, and also fully maximize the formation of that higher Elliot wave count 2 to the lower side. And getting a little bit into the details of the formation of this Elliot wave structure, so that I can give you the short-term scenarios that I'm expecting to play out here on the quant chart, I can use the trend-based Fibonacci to sketch out a minimum target area to the lower side in the formation of this wave 5 by connecting the trend-based Fibonacci from the high of that first wave to the low of the wave 1, then dragging the fibs to the low of the wave 3, which is down there. And that gives me a minimum target area to the lower side in the formation of this wave 5 at the fib level 0.618, and that perfectly lies at around the $72.8 mark. And that would mean we need to fully maximize this red target area that I have right here using the Fibonacci's, manage to break out of the target area a little bit and fully maximize that target area using the trend-based Fibonacci for us to have a new low in the formation of that higher Elliot wave count 2. Then from there, we can expect an impulsive movement to the upside in the formation of this higher Elliot wave count 3 to the upside. And that is my primary scenario that I'm expecting to play out here on the quant chart. I'm expecting one more new low in the formation of that higher Elliot wave count 2, and using the areas of support and resistances to also give you the short-term scenarios that can play out here on the quant chart. That is on the 4-hour chart. You can see we are trading above the 20-day MA, meaning right now the 20-day MA is giving us support, and there are chances that we might continue pushing a little bit higher, get back to the key area of resistance at around the $110.9 mark. And in case we do not manage to break above that key area of resistance, then I would expect a pullback to the lower side, and there are chances that we might lose that key area of support at around the $100.3 mark. And in case that happens, then I would expect a retest of that key area of resistance, that is that that key area of support, and once the retest is in and a success, then we can continue pushing even lower, fully maximizing this right target area in the formation of these higher Elliott wave count 2, and continue pushing even lower in the formation of this wave 5 to fully maximize the formation of that wave C to the lower side. There are also chances that, given the support of the 20-day MA, we can manage to break above the key area of resistance at around the $110.9 mark, and in case that happens and we see a successful retest of that key area of resistance, then there are chances of seeing a bit of a short-term bullish movement here on the quant chart before we continue pushing even lower to fully maximize the formation of that higher Elliott wave count to the lower side. So let's be patient and see how that plays out. Also taking a look at the indicators here on the RSI. On the RSI, we are trading at around the 55 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side. Also taking a look at the MACD. On the MACD, we have printed a bullish cross, and that would mean higher prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.